Hello, welcome to TS Lombard. Well, I think markets are underestimating Trump's protectionist tendencies, mainly because for the past 30 years we've actually moved in the other direction. We've moved towards free trade, liberalization of global markets, and everyone pretty much agreed that that was a good idea. So the idea of reversing that, I think most people would think would be quite destructive, and so they assume that Trump won't do it because it will be destructive. But I think everything we know about Trump and everything we've seen since he's taken office, and even before he took office, suggests that he is moving towards protectionism, and markets probably need to pay more attention to that. Well, Trump's a businessman, so he thinks in terms of negotiation and deals. And if you look at the tariffs that the US pays compared to the tariffs on imports into the the US does seem to be getting a bad deal. But I don't think that's a big part of the story, because really what's been happening here are much deeper global structural forces like globalization, like changes in technology. And I think those are the big part of this story. And I don't think a small change in relative tariffs would really make much difference. So there are lots of Trump trade scenarios. The obvious one is that everything stays the same, that Trump is bluffing, that he doesn't really mean what he's saying, so a kind of status quo. I don't think that's particularly likely. A more likely one would be some kind of trade frictions, so not a full-scale trade war, but certainly an escalation in tensions, similar to what we saw in the 1980s between the US and Japan. Another scenario would be some kind of grand bargain, Trump renegotiates trade deals that work in everyone's favour. I don't think that's particularly likely. And then there's the full-scale trade war, which is that the US puts up tariffs, everyone else responds, we get a kind of classic trade war. I think that's probably likelier than markets are expecting, but I don't think that's the most likely outcome. Well, economists always like to look back to the 1930s, and that's because that was the last period of clear trade wars when everyone was putting up tariffs and reacting to each other. And the reason for doing that was the Great Depression and policymakers seeing that as a way to get their economies going again. And of course, it didn't work. And of course, today, now we see politicians starting to move towards those same policies for the same kinds of reasons, but it's unlikely to work today either. I think a trade war would be different now. In the classic trade war, everyone puts up their tariffs and you get more inflation, less growth, so you get a worse trade-off between the two. But I think in the kind of trade war that we're talking about today, we're more likely to see currency devaluations as part of that, particularly from China. And so it could be more deflationary than the classic trade war. Well, I think China is the key part of this, because if the US did put up tariffs, then it's likely that the Chinese would respond by devaluing their currency. The main reason for that is that while China is a currency manipulator, it's not in the sense that Trump has been saying. It's in the sense that it's been keeping its currency artificially high in the face of massive capital outflows. So the most likely scenario is that the Chinese just stop doing that and allow their currency to drop very sharply in response to US protectionism. So a trade war in which China devalues in a big way is quite different from the classic trade war. In terms of the impact on the US, you'd have higher tariffs offset by Chinese devaluation. So the impact on US inflation isn't really that clear. I think the impact on global inflation would be much clearer, because this would be a clear deflationary shock to the global economy. China would be devaluing against everybody. And I think the market reaction in this is clearly very important, because one of the things that has been bothering investors over the last few years has been the risk of China devaluing. So I think if China did devalue, we could see a very nasty negative reaction in financial markets. And of course, protectionism would be part of that too. And so you could see a much more difficult environment for investors.